So welcome to our presentation tonight. This is put on by Homeownership San Francisco, and today it's our Homeowner's Guide to Avoiding Foreclosure. Today we have presenters from the Mayor's Office of Housing and Community Development, as well as Balance. Next slide, please, Henry. And Homeownership San Francisco, it's essentially a group of 5 partner agencies local to the area. It's made up of Asian Inc., SFLGBT Center, META or Mission Economic Development Agency, Balance, and SFHDC or the San Francisco Housing Development Corporation. Next slide, please, Henry. My name is Chris Cito, and I'm a counselor with Balance. You see my contact information there. So if you ever have any questions about housing related issues, please do feel free to give me a call at that number and direct extension. You can also visit our website, balancepro.org, for more information. And some of the services we provide focus on homeownership counseling. This is for those who want to get into the home buying process, rental counseling, debt and budget counseling, credit report reviews, and student loan counseling. So pretty much all manner of financial counseling related to general things and housing related issues. Next slide, please, Henry. So the big topic of today, avoiding foreclosure. A lot of times people first experience just unexpected communications or things kind of coming out of nowhere. And the first things that can come to a homeowner's mind is, what do I do to help address this situation? And we always say that communication is definitely critical. Hopefully the first party that you talk to is a HUD-approved housing counseling agency or a housing counselor like myself. You definitely want to be aware of the status of your loan, any help that might be available out there to you. So oftentimes this can come from letters from a mortgage company. It can come in the form of phone calls from them. So just being able to make sure that you can talk to them and read these notices and what they're sending to you can be quite helpful just to figure out what's happening at this point in time. Most letters they send will also have phone numbers on them and ask for a homeowner to reach out to the mortgage company and ask them for, contacting us for assistance. So that's always a great thing to do. If you do make that call, you should try to keep active call logs, making sure you know who you spoke with, what the conversation was about, what the context was. It's also there so you can kind of keep everybody accountable. You can keep yourself accountable, and you can hold them accountable to what they say they might be doing. And that way they can follow up and make sure everything is going accordingly to plan. Now you'll see a big kind of purple bubble there on the side there that says avoid foreclosure scams. And that's a really big thing that's been happening, unfortunately, for too long. And there's a lot of companies out there that try to solicit people for services. Definitely you want to be cautious on what might be happening because they try to take advantage of someone's situation and could end up in a worse off position for you as a homeowner. Next slide, please, Henry. These are just some of the things that you would want to pay attention to be red flags of any kind of scams. So a lot of times they can ask you to pay fees. And just so that you know, there should never be a fee that anytime someone is applying for mortgage assistance. They should basically just provide help, free of charge. Sometimes they'll ask you to do things that sound very strange, like signing paperwork that doesn't make sense. They might try to pressure you and say there's a limited amount of time for help, so you have to reply now. Things that just make you cautious and leery, kind of like it says, if it sounds too good to be true, it probably is. That's most likely the case. And if you're ever not sure about something, contact a counseling agency, like ourselves, or call, somebody just to talk about it to make sure that is this really legitimate or not. You'll also see a link on the bottom of the slide here. It goes to the Consumer Financial Protection Bureau, and they're actually a government agency that's designed to promote consumer advocacy and just the ethical treatment for consumers. And so there's a lot of good information on their website, consumerfinance.gov, about pretty much everything that's related to, again, just protecting the consumer's rights. Next slide, please, Henry. So when seeking mortgage assistance, there's generally quite a few different options that are out there, but it'll really depend on what's happening in each person's situation, as well as their circumstances. Some of the help comes directly from the mortgage company. So you'll have, for example, a forbearance. You could have a repayment plan. You could have a reinstatement, or you could have a loan modification. And there's some times where a homeowner might be looking for help from the mortgage company, but that help may not be able to be granted. It could be someone doesn't qualify, or that certain program's not available. And in that case, there may be times where someone has to look for help outside of the mortgage company. And that could involve things like seeking legal guidance, for example, through the process of bankruptcy. Next slide, please, Henry. So what you see most commonly right now, you'll see is a forbearance process. And what that is, it's a way for the mortgage company to allow a homeowner to temporarily either skip payments entirely or pay a heavily reduced payment for a certain period of time. And the amount of time that the payment goes unpaid, unfortunately, a lot of people maybe hear or think that the money just is forgiven, it kind of goes away. But that's not the case. A homeowner actually has to repay any unpaid amount during a forbearance. It just depends then on what kind of options are available to that homeowner once that forbearance program expires, and can someone qualify for that kind of program to help them get back up to current. The forbearance process usually is granted verbally. So this is where, again, communication is very critical. Just by talking to the mortgage company, they might be able to let you skip payments for a certain period of time just by asking. But other times they might require documentation. So that could involve some kind of hardship letter, something explaining the reason for requesting assistance. So if they ever ask you for paperwork, you always want to submit whatever you can from that request so that they can process the assistance that you need. There's also the, again, concept where if the payments are put on hold, what do we do with all that money that we don't have to pay to the mortgage? And ideally, I would say if you could try to set that money aside, put it away just in case if you have that capability, because you do have to pay back the payments that are skipped. However, sometimes the money has to go to everyday living and housing needs, or sometimes it goes towards eliminating some debt payments that are very high. So it really depends on someone's situation, but that can also be where it's helpful to speak with someone, again, like a housing counseling agency, so they can go through those different scenarios with you and help you explore what options make the most sense, what strategies kind of work out for me the best. Next slide, please, Henry. So when the forbearance expires, as we were mentioning, a homeowner does need to pay back what is outstanding and what is owed. And there's different types of programs available depending on the kind of loan that someone has. There are what we classify as government-backed mortgage loans. And these are considered loans that are tied to entities like Freddie Mac, Fannie Mae, FHA, the VA, or USDA. Otherwise, if it's not tied to any of those different organizations, it's what we would consider a privately held mortgage. And you'll see here there's also a link again to the Consumer Financial Protection Bureau, where it says, how can I find out who owns my mortgage loan? And in that article, there are several links that you can click on. And these will be to a website for what we call loan lookups for both Freddie Mac and Fannie Mae. So you can enter in your address with the last 4 digits of your social security number, and it should tell you whether or not they hold your mortgage loan. Other times, if you're not able to identify that those are your mortgage investors, you can also send what we call a request for information, which is a written letter to your mortgage company to ask and inquire who my mortgage investor is. And that's a pretty important detail, just because at the end of the day, those are the entities who decide what kind of help is out there for you as a homeowner and how you qualify, for those processes. Next slide, please, Henry. Another option, and this is, I guess, the ideal option if someone's coming out of a forbearance or if they've fallen behind, is to get caught up on their own. And these two processes or programs are the ones that I'd say, again, are ideal if it's affordable. The first one being a reinstatement, which is essentially just a lump sum payment, paying everything back at once. Typically, though, that's not very affordable. It's not too realistic. So if you happen to be able to do that, fantastic. But if not, there are other ways to address the situation. The other option in this case, as you can see here, is a repayment plan, which is essentially paying back in installments. And what the mortgage company would do is take the amount that someone might be behind and split it up over a certain number of months. And this installment is then added on top of your regular monthly payment. So it's guaranteed to actually increase your mortgage for that set period of time. So just as an example, if somebody, let's say, had missed 6 months of mortgage, or you were on a forbearance for 6 months, and if you wanted to utilize a repayment plan that happened to be 6 months long, you'd have to actually double your mortgage for the next 6 months to pay it back in that time frame. Another example is if, let's say, they gave you a 12-month repayment plan, you'd basically have to pay a payment and a half for the next year in order to complete that repayment plan and to meet those terms. And as you can see, because it is guaranteed to increase someone's payment, that might not be also, again, a very realistic option, depending on how someone's finances may have changed during that time frame. Next slide, please, Henry. Another option, if someone cannot afford to get caught up on their own, is what we call a loan modification. And this is where a lender will take any amount of past due mortgage and they'll reincorporate it into the existing mortgage loan amount to bring the account current. So let's say someone fell behind $10,000 and they owed $100,000 on their mortgage. After the modification, they would owe $110,000. So you see that balance again grows in that size. From there, what they'll do is they'll so-called modify, or they'll change the terms of the loan, which this can involve changing either the interest rate, it can involve changing the length of the mortgage loan, or maybe even adjusting the principal loan amount, although that's not as common these days. But whatever they can do to try to help make the payment more manageable, but also to get the account current. There's also another option that we see a lot of right now because of COVID, And this we would call a deferment of payment. And this actually takes anything that someone has outstanding, and the mortgage company can put it on the side as a separate amount of debt, which typically doesn't get charged any interest. And typically there's no monthly payment. And somebody would resume paying their regular monthly payment at that point in time. But the amount that's sitting there on the side is usually due under one of three conditions happening. Either someone pays off their mortgage, then you'd have to pay back that deferred balance all as a balloon all at once. Or if somebody were to refinance their loan, you'd have to pay off the amount with the refinance. Or if you were to sell the property, you'd have to pay it off as part of the sale. And again, these are just a lot of the most common options that we see provided by mortgage companies, given the current situation of the housing industry and the economy. Next slide, please, Henry. So to help someone through this process, you might find yourself speaking again with a housing counselor like myself. And generally what we can do is help someone, we'll look at your situation as a whole, understand the circumstances behind what's taking place, provide any kind of resources or referrals that we can, and also talking about, how you can get the help you desire. Is it a deferment or is it a modification? And in some cases, this is again the first time that someone might be experiencing these kinds of issues. So a lot of times a counselor can even help communicate with the mortgage company, either on your behalf or with you on the phone as well, just to make sure that things are going, again, accordingly, and to help guide you through the process, because it's not a easy thing to experience, and it's not something, again, most people have dealt with before. So sometimes it can be quite a bit overwhelming. Next slide, please, Henry. Now, this is actually a pretty exciting program and something that has came out recently at the beginning of this year through the American Rescue Plan. And it's part of a national program called the Homeowner Assistance Fund, which you might see a lot of being advertised on, the TV or on the news. And this California Mortgage Relief Program is federally funded, and every state has funds to provide help to those homeowners who were first off affected by the pandemic. You can actually apply for this help right now on their website, which you'll see there as California, or rather camortgagerelief.org. And it's a really, again, amazing program because it can provide up to $80,000 to help somebody get caught up on their mortgage delinquency. Next slide, please, Henry. These are just some of the qualifying conditions. So for, again, a mortgage, you can see up to $80,000 can be granted to help somebody get caught up. For property taxes, someone can also get up to $20,000 to get caught up on their property taxes. You'll notice that on the first box, someone does have to have been affected by the pandemic. So that is a condition of applying. For the mortgage, you would have had to have fell behind at least 2 payments before June 30th of this year, 2022. So essentially, you would have had to have fallen behind on April and May's payment before you would be eligible for this program for the mortgage relief. On the taxes, you would have had to have missed 1 property tax installment before May 31st of 2022. Next slide, please, Henry. These are just additional requirements to perhaps qualify. So the delinquencies that we mentioned, you also have to have under $80,000 of delinquency if you're looking for mortgage help. So if you happen to have, let's say, $81,000 owed on delinquency, it doesn't automatically disqualify somebody, but you do have to pay down your delinquent amount so that by the time the state provides the funding, it would only be at this maximum $80,000 program benefit. You also have to either live in a single family home or a condo, or it can be a permanently affixed manufactured home. Unfortunately, multiple unit properties do not qualify. So if you happen to live in a property that has 2 units or 3 units or even 4 units, unfortunately, that won't be able to be approved just as of yet. There's also a income requirement, and you have to earn below these actual income levels, and it's based on 150% of what they call the AMI, or the area median income, and it's based on the county that you live in. If you actually go to their website, and about halfway down on their homepage, there's a link that you can enter in your information where it'll ask you for the county that you live in, and it will ask you for your household size, and it will populate what income level you have to be under in order to qualify for that assistance. Here you'll see for the San Francisco area, it's actually quite high to be eligible. So as long as you have, again, below that income level, then it's worth applying for that process. Next slide, please. So to start the actual application, when you go on that, again, website, on the home page, you'll see a big button that's, I think, orange, and it says Apply Now. And when you click it, it takes you to this questionnaire, which you'll see some of these questions listed. Pretty self-explanatory, but you'll want to check off what applies to you. So, have you had a COVID hardship after January 21st of 2020? Yes. Are you behind at least 2 mortgage payments? And again, this shows a date of December 27th, but that has been updated to June 30th of this year. Do you have just one residential property and you live in it? Yes. And you're applying for assistance for mortgage, payments? Yes. And once you click all of those, it'll take you to a place where you can start an actual application. And they only take applications online right now. So you'll have to be able to, be fairly comfortable with filling out some portions of their online website, but also uploading documents to provide supporting verification of what's happening. And this can include things like a mortgage statement, proof of income like pay stubs or taxes, a bank statement, utility bills or property tax bills, and sometimes even proof of coverage for homeowners insurance. And if there's any questions that you might have about the application process or issues with their website, they also have a contact number for their call center. And that number we can provide at a later date, but if you want to write it down, it is 888-840-2594, and they're available Monday through Friday from 8 a.m. to 6 p.m. And also, just from experience, to give anybody who might be interested in applying a idea and just a general timeline, typically from homeowners who I've dealt with who've applied, it can take anywhere from 2 to 4 months to go through the application process, approval process, and final funding, where the benefit is sent directly to the mortgage company to get someone's account back up to current. And next slide, please. And this will bring us to our next presenter, which would be Feli Charoun of the Mayor's Office of Housing and Community Development.
Thank you, Chris. Good afternoon, everybody. Again, my name is Feli Charoun, and I am the Homeownership Preservation Programs Analyst at the Mayor's Office of Housing and Community Development. If you need to get in touch with me directly, my phone number and my email address is right there on that slide. And today I'm going to be talking about a couple of programs we have available at MoCD for homeowners in San Francisco that are currently facing a financial hardship. Next slide, please. So our first program is called the Homeowner Emergency Loan Program, also known as HELP. And again, this is a one-time financial assistance loan for San Francisco homeowners who are in need of help due to an unforeseen financial hardship. The funds available under the HELP loan can be used to pay for HOA special assessments, which are the renovation or other building costs passed down to owners. It can also be used to pay for the past due HOA monthly dues or fees, past due property taxes, and past due mortgage payments. Next slide, please. Due to the pandemic, we went ahead and modified certain guidelines of the HELP loan program and came up with a COVID-19 HELP loan program to assist San Francisco homeowners who were experiencing or are still experiencing hardship due to the COVID-19 pandemic. Some of the additional use of funds that we included in the COVID-19 HELP loan, it's to pay for current and also future HOA payments up to 12 months. So that use of funds is not eligible. It's not eligible under the regular HELP, but under the COVID-19 HELP, the homeowner can pay for up to 12 months of HOA dues. It can also be used for delinquent HOA, delinquent and or current special assessment. It can also be used to pay for mortgage forbearance deferred payments that are due in one lump sum, and an affordable repayment option is not available. This use of funds will be available most likely to homeowners that don't have a government-backed loan like a Fannie Mae or Freddie Mac, because those government-backed loans do offer an affordable option after the forbearance comes to an end. But for other mortgages, we see sometimes that they do reflect the CARES Act requirement of offering an affordable workout option after a forbearance, but in many cases they don't reflect that. And the options available to homeowners after the forbearance is over are either very unaffordable or puts the homeowner in a situation that could eventually result in a foreclosure in the future. Under COVID-19 HELP loan, the funds can also be used to pay for delinquent non-escrow property taxes. And this is only for homeowners that don't have their property taxes impounded in their mortgage. So for those homeowners, they can still use a COVID-19 HELP loan. For more information about this program, you can go to the website address listed on the slide. And if you need assistance with the application or the documentation that's required to be submitted with your application, please contact Homeownership SF at info@homeownershipsf.org. Next slide, please. So the eligibility criteria for both programs are similar. So right now I'm going to go over the similarities and also the differences between the regular HELP and the COVID-19 HELP loan. Both programs are available for owner-occupied properties that are 1 to 4 units. If it's more than one, if the property has more than one unit, the borrower, the homeowner, needs to occupy at least one. The maximum income limit for both programs is 120% of the area median income. under the regular help loan program, the homeowner must demonstrate financial capacity to continue paying all housing costs, which includes principal, interest, taxes, insurance, and association dues. This is calculated at a housing ratio of 40%. So what we're going to do is we're going to look at all of your housing expense, which includes principal, interest, taxes, insurance, and HOA. We're going to add all that amount together, and we're going to take your gross income, and we're going to determine if your current monthly housing expense is at or below 40%. If you're over 40% compared to your gross monthly income, then you wouldn't be eligible to qualify for the regular help loan program because you don't have enough, the homeowner wouldn't be having an affordable payment. So the homeowner wouldn't be able to continue on paying the mortgage after they obtain assistance with help. This requirement is not required under the COVID-19 help program because COVID-19 help it's to assist homeowners that was affected by COVID-19 or is currently being affected by COVID-19, but it's not a permanent situation. Either they're going to get back to work or they're going to be able to increase their income, and therefore they will be able to continue with their mortgage payments or their housing expense after receiving the COVID-19 help loan. There is a minimum housing ratio of 28% for both regular help and COVID-19 help, and this is basically to determine affordability. If we see that a homeowner has a current ratio of 28% or lower, that their total monthly payment is 28% of their total monthly gross payment or lower, then that's determined affordable. So we will suggest the homeowner to try to look for other options that can help them become current. An appraisal requirement is only under the regular help loan program. Appraisals or valuation determination is not going to be conducted under the COVID-19 help program. Under both programs, there is a maximum combined loan to value ratio of 100% or lower. So even though an appraisal is not a requirement under the COVID-19 help loan program, we're still going to look at the value of the home, and we're going to take into account all the mortgages that are against the property, and make sure that all the loans are not added up or not over 100% of what the property could be worth today. And then inability to secure financing from traditional lenders and or ineligibility for other financial options is a requirement under the regular help loan program. This means that a homeowner, before applying for help, must go out and try to apply for traditional options, either a traditional refinance, either a HEMP, or a modification option through their mortgage company, or the California Mortgage Relief Program. So we need to see that the homeowner actually went out and tried to obtain all the available programs out there for the homeowner, and that the homeowner was denied. Once the homeowner gets that denial, then we will take into account the homeowner's application for a regular help. Under COVID-19 help, that is not a requirement, except when the homeowner is applying for forbearance payments. So we will require either a denial for a long-term solution after the forbearance is over, or a option that is not affordable. So we will need to see that to be able to approve a COVID-19 help loan to use the funds to pay for a forbearance amount. And then lastly, only under the regular help loan program, we do require the homeowner to attend a one-on-one foreclosure intervention counseling session with one of the HUD-approved housing counseling agencies. This is very important because we want to make sure that the homeowner understands their options and applies for all the options available to them before they actually go and apply for a help loan. And also because the counselors are very knowledgeable about the program, about the guidelines and the requirements. So they'll be able to look at all of the information that homeowner provides and determine if the homeowner meets the basic eligibility requirements for help. Under COVID-19 help is not a requirement, but we strongly suggest homeowners to work with a HUD-approved housing counseling agency because it can be a very stressful and time-consuming process to apply for either a help or a COVID-19 help loan. It's very similar to applying to a regular mortgage, either through a refinance or a purchase. So if you remember when you purchased your home or when you refinanced it, there's a lot of documentation and a lot of steps that a homeowner must take. So we strongly suggest to work with a housing counselor. Next slide, please. Thank you. Here we have the income table. This is the maximum allowable income for a household size in 2022. So here we have the household size and the maximum income limit for the year of 2022. Next slide, please. Here we have the loan term. So both programs are very similar in regards to when the loan is due. Under regular help loan, the loan is due and payable in 30 years or upon sale, transfer of title, or non-compliance. Under the COVID-19 help loan, the term is the same except for the 30 years. There's no 30-year term. So with what that means is that if 30 years come, the homeowner doesn't have to pay back the loan. They can just keep on having the loan because it's a silent loan. But if they sell, transfer, if they transfer title, or if they are non-compliant, which means if they move out or rent the property out, then the COVID-19 help loan will be due and payable. The cost of the loan under the regular help loan program is a share of appreciation, which means we will take into account your current property value compared to the amount of compared to the loan amount. So if we are lending you, let's say 5% of the current value of your home, when you're ready to pay back the help loan, we're going to look at how much the property value increase from the date that you obtain the help loan to the date that you are ready to pay it off. If the property value, let's say, went up $100,000 in those 20 or 30 years, however long it takes you to pay off the loan, then we will require for the homeowner to pay back the original loan amount plus 5% of the increase in share appreciation. So it will be 5% of the $100,000 that the property went up from the day that they obtained the loan to the day that they're ready to pay back. Under the COVID-19 help loan, it's a little different. This is just a 1% annual simple interest that's going to be calculated on top of the principal loan that was obtained at the time of closing. The maximum loan amounts under help, it's $50,000. Under COVID-19 help, we have $12,000 for advance or future HOA dues and up to $25,000 when combined with other COVID-19 help permissible uses. So a homeowner may be able to apply for 12 months of future HOAs and maybe past due amount that they also have on the HOA for, they say they're behind 6 months. So we can include the 6 months that they're behind plus the future 12 months, as long as that combination doesn't go over $25,000. Under both programs, there are no monthly payments, and the minimum loan amount is $5,000 because there are title and escrow fees related to the loans. So if you need assistance or for a lower amount than $5,000, then we suggest for the homeowner to look for alternative options that are less expensive. compared to the HELP or the COVID-19 HELP loan. And then cash out of escrow directly to the homeowner is prohibited. So if, let's say, a homeowner obtained a $50,000 HELP loan to pay back an HOA balance that they owe, and at the time that we are ready to close, title company requests a payoff statement from the HOA, and instead of being 50,000, it's 45,000. So the title company will go ahead and disperse $45,000 to the HOA to pay the total past due amount, and the remaining $5,000 will come back to MoCD to lower the final balance of the loan. So again, no cash out will be going to the homeowner. Next slide, please. And then this here is the HELP, or also the COVID-19 HELP application process, because both are very similar, except again, the requirement that under HELP, the homeowner needs to go through the Housing Counseling Agency. COVID-19 HELP, the homeowner can go ahead and submit their application directly through the website. So step one will be to contact Homeownership SF if the homeowner is applying for HELP, or if the homeowner is applying for COVID-19 HELP but still wants the assistance. They will attend a post-purchase counseling session with a HUD-approved housing counseling agency. The website to Homeownership SF is right there. It's fairly simple, homeownershipsf.org, for them to get started and get connected to with a housing counseling agency. Once they're ready, they go ahead and if they're working with a housing counseling agency, the counselor will go ahead and submit the application and all the required documentation using a share file link that's listed on the HELP website. Again, that link can be also used for, there's two separate pages, one for regular HELP and another one for the COVID-19 HELP. So if a homeowner is applying for COVID-19 HELP, they got to make sure that they use that link. And step two, and final approval is very similar for both programs. We will receive and review and possibly request additional information. Once we determine that all guidelines have been met, we provide a loan approval. And after providing a loan approval, the homeowner will have a pre-closing appointment to go over the loan terms and all the closing documents. Once the homeowner is ready to move forward, they will sign closing documents with title. Most likely a notary will come to their home to do all the signing. Once we receive confirmation that all the documents are ready to have been signed and they're ready to go, we will go ahead and fund and close the loan, and title will go ahead and record. Once title gets the approval from OCD, they'll go ahead and disperse all funds to the entities that need to be paid based on what the funds are going to be used for. Next slide, please. And here's the information for this Saturday's Housing Expo, Resource Fair and Help Center. The time and the location is right there on the slide. If you are able to attend, there's going to be a lot of information and resources. So right now I'm going to pass it back to, I'm not sure if Chris or Ann from Homeownership SF, but thank you for joining us today.
Oh yeah, and both Felly and I will be there on Saturday. So if you come by, say hello.
That's right.
And I guess we'll open the floor if there happen to be any questions, anything from any of our viewers. I don't know, perhaps Henry or Marianne, are they able to enter that in chat perhaps? Okay.
Yes, if they have any questions, feel free to drop it in the chat. and they wanted to thank you, Chris and Feli. That was very informative, and I agree. Thank you. Alrighty. Well, with that being said, if there are no questions, I think we are good to go.
Yeah, we're good to go. Yeah, that's the end of the workshop for tonight.
Okay.
All right.
Okay.
Well, thank you. You guys have a great night.
Yeah.
All right. Thank you
Likewise.
so
Thank
much.
you.